Hey investor, good to see you again. This is Lukas here from excelwealth.com and I'm very happy that you joined me today because in today's video I'll be discussing the 4 things that you should absolutely avoid as a beginner investor on the stock market. Now you might be thinking, yeah but Lukas, I've heard all the stories. Yeah well, we'll get to it as a professor and we'll run the numbers for you as well so that you can see, that's a good idea why I shouldn't do that. So let's go into it and check this out. Okay, so you've joined me. That means that you're interested in the 4 things that you should absolutely avoid as an investor the moment you're on the stock market. Now, the very first one that I want to share with you, and you've heard of this one before, is emotions. So the first one is emotions. The moment you're investing your money on the stock market, there are different kinds of people that have different kinds of emotions. Now, the interesting thing is, the moment I see investors, they actually invest their money. And this could be, maybe $100, maybe $1,000, maybe $10,000. But I'll tell you this, the moment we're talking about $10,000, I know that you have something called the emotions. And the emotions actually kick in because the moment we're talking about $100, maybe $1,000, and you're investing on the stock market, no matter if you're investing in Amazon or in Tesla or even in things like Bitcoin or Dogecoin, or even this could even be an index fund or any kind of index fund like the S&P 500 or the Dow Jones. Now, the moment you put $1,000 in this year, I know that, you don't really care if it loses some value over time because, hey, it's only $1,000. But the moment you're talking about $10,000 and you're actually thinking about the emotions as well, $10,000 all of a sudden is far more superior, is far more thinking like, you know what, I don't want to lose this money. All of a sudden, your emotions kick in because the moment we're talking about a serious amount, and that serious amount could differ for different kinds of people. But if we're talking about a serious amount, all of a sudden, the emotions that you see here, and that you and I have as well, most likely they kick in. And how to avoid the emotions? The moment you have a clear strategy, then, it doesn't really matter if you have emotions because your strategy will tell you what to do. The second mistake that we're talking about, now, the second mistake that you should actually avoid is, of course, the news. Now, I'm not saying that you should avoid the news because, in the end, we should just take a look at the news. But the thing is, don't be afraid of the news. Don't be scared of what the news is telling you. The moment the news is telling you that Bitcoin is falling, do something about it. The moment the news says that, most likely it has already fallen. And most likely not an hour ago. No, the news channel, they have to gather that information as well. So most likely the moment the news is actually telling you, showing you the public, like, hey, this is the news. The moment that actually happens, it already happened. So if the news is there, you shouldn't be scared of the news. You shouldn't be amazed like, oh no, the stocks are falling now. You don't have to be afraid of that because the news is always afterwards, so don't worry too much about the news. The thing is, do know how to interpret the news. So if the news actually says, there could be some interesting time coming up right now for that and that kind of company, that just means, hey, maybe you should take a look in your research. Maybe you should reevaluate all the information that you already have. Should you do something about it? Either yes or no. That's far more important. So don't be afraid of the news. And don't avoid the news because in the end, it's kind of, you can't really avoid news because the moment you're investing in the stocks, you can't really avoid the news. But you can take a look at like, okay, what does it mean? Now, the third mistake that I see so many investors doing is, yes, waiting too long. Now, I hope that you can read my handwriting. But the thing is, don't wait too long. People are waiting and waiting for the best time to get in. Like, I think it's a turbulent time and I think that the market will fall very, very soon. So I think it's a better idea to wait it out. Yes, it's always a good idea to wait it out. But if you say it like this, when will the best time come? And most likely, since you don't know, and I don't know either, you'll always be waiting. The moment the news strikes you, number 2, that hey, the markets are interesting. Well, the moment the news tells you, you're already too late. You already missed the opportunity. You already missed the boat taking that opportunity to buy cheap. Because the moment the news reaches you, the moment you find the information like, this, I see, according to the stocks and the charts, that it is right now very cheap. The moment you see that, it's already too late. So don't wait. Start buying today. And yes, if the stocks fall tomorrow, that just means, hey, you just bought stocks a little bit expensive today, but hey, starting from tomorrow, they're cheap. And the moment they're cheap, you can buy more. So this is why it's so important. If you're a beginner investor, don't wait any longer. Buy today. Have a clear strategy. Just like in number one says, the emotions can be controlled the moment you have a strategy. Have a strategy, know when to start, and start today. Don't wait till tomorrow because, just like a weatherman. I'm sorry we're sidetracking here right now. Just like a weatherman, he can be wrong each and every day, but he'll never lose his job. Well, that's what he does. Just like you in investing. You will never lose your job if you just keep on proceeding in your investment strategy. You'll lose if you quit. That's the moment when you lose. And number four, mistake number four, is the last one in this case that I want to share with you, is being too involved. Yeah, yes, I know. My handwriting just fits on the piece of paper, but okay. So yes, not being too involved. Most likely you're being too involved. Now, what do I mean with that? It's not like, you don't work for Amazon, so you can't be involved with them. It doesn't mean that, if you're buying stuff of Amazon, you're actually buying into your own stock. And yes, to be honest, it is your own pocket, but then again, you're not being involved in that way. Being too involved just means that you're keeping track of the stock far too much and thinking like, I've got $1,000 invested and I see my money actually dropping in value. I don't like that. I know that I'm not touching it because that my strategy tells me not to touch it. But just because you're keeping track of the stocks, you're being too much involved. The moment you have a clear strategy, what you need to do, apply the strategy, don't touch it. Just don't look at it. Don't look at it. The moment you should look at it, as your strategy tells you, for example, like once a week or once a month or once every half a year, I don't know what your strategy tells you, but the moment you should look at it according to your strategy, that's the moment you look. If you're a passive investor, and I'm as well, and I only check my stocks once a month, and if I keep checking them each and every day, or multiple times in a day, most likely you'll be shitting your pants. Now, I shouldn't be saying that, but yeah, most likely you'll be thinking like, I see them going up and down. Is it a good idea did I buy the right stock here? Did I make a good choice here? Is it really the strategy that I really wanted to follow? You're going to start doubting yourself. You're going to get your emotions playing your game like, you know what? I'm actually being too involved. Now, we don't notice that ourselves because, we're like a first person. But the moment you zoom out, you're like a third person seeing yourself like in Grand Theft Auto. You see yourself, you're like, oh, now I see what I'm doing wrong. Yes, you're being too much involved. That's the biggest mistake that you can make, being too involved. And this is why, if you start investing, and you don't even have to be a starter investor. If you're an investor and you do this for a longer time already, most likely, if you're successful, you've overcome these 4 mistakes. And if you overcome these 4 mistakes and you avoid them in all future cases, most likely, investing becomes a lot easier. And of course, hey, this is the end of this video because if you avoid these 4, investing will become a lot easier and your money will start growing as well. I thank you very much for watching today's video. If you liked the video, don't forget to hit that subscribe button as well. And most likely, myself will pop up here and say, subscribe, hit that notification bell as well, and come back the next time. I thank you very much for watching. I'll see you in the next Happy Investing.